This is John Martinka, and I am here today with Lisa Forrest, an old friend and a really good lender with 30 years of experience lending on buy-sell deals. She is with Live Oak Bank and does both SBA and conventional loans. So Lisa, thank you for being here.
Thank you, John. I really appreciate it. And I don't think we need the reminder that we're old friends, but I certainly appreciate how long we've known and worked with each other. And I consider you a friend. So thanks for the invite.
Yeah. So before we talk about buy-sell lending, you've got a large portfolio of loans at Live Oak Bank. What have you seen uh, businesses that have thrived, survived, or been hurt?
Oh. Well, obviously as one of the lenders that really participated quite heavily in the PPP process, that was one of our first activities that we took on. And then the second activity was really looking at our portfolio to understand where we needed to put some focus and to understand where we might also have opportunities for our existing portfolio. I think that it would be no surprise that the industries where it is required for our citizens, customers, clients to be out and about and be able to, freely move about the country, those industries are obviously impacted. And I think economists are saying they're going to be impacted for some time now. I think the thing that was really welcome and really surprising is that the level and the number of small businesses out there that are doing actually very, very well. They've been able to survive, pivot, and actually take advantage of opportunities that are out there. So obviously monitoring our existing portfolio is something that we're doing on a daily basis and quite active, and it's going to have our attention for some time now.
Okay. Have you seen any uptick in some of those clients saying, hey, I am not going to go through this again, I want to sell?
Not yet. I think part of it is, at least in our existing portfolio, is the clients that are just really trying to survive, make good on their commitments to the bank and to their employees. So I don't think we've seen that wave of our portfolio, at least, just throwing their hands up.
Okay. So this is something new for all of us, the virus and the related economic downturn. Are you looking for any different financial information now than you were 12 months ago?
In a way, yes. I think we're obviously interested in the 18 and 19 financials, understanding the trend of the business, the historic success, because we are looking at historic debt service coverage from an acquisition debt perspective. The one thing that we really key on, first and foremost, is the 2020 financials, where that might have been maybe the second thing we asked for after getting 2019 financials. It's actually the first thing we're asking for. We're asking for 2020 performance financials, and in relation to where the business was same time 2019, that's really where we're starting. And then we're going to look at maybe where the company was from a trend perspective second to that, just to understand the nature of the industry and the opportunity presented to our buyer.
Okay. Are you looking at any more or looking differently or deeper at non-financial factors, customers, employees, suppliers, competition, etc.?
Absolutely. And I think this is one thing you've always been such a good coach around, John, for your clients, is the idea of dependencies, whether it's a dependency on the seller or key employees, the supply chain. So we've always been interested in the dependencies, but we really are starting with the dependencies. In fact, we have a whole new COVID due diligence questionnaire, and we really delve into that whole supply chain. What's going on? How are your customers impacted? How are your vendors, your suppliers impacted? And kind of for your vendors and suppliers, how are their customers impacted? Just making sure that everyone in that whole chain has the ability to stay in business. So we're definitely keying in on that. And I can share my COVID questionnaire with you.
Well, you already have, and I've shared it with all
Okay.
my clients and saying, you better ask these questions up front because the bank's going
Yeah.
to ask them no matter what. So thank
Yeah.
you. Uh, the SBA had months ago announced a payment program where they're picking up the first 6 months of principal and interest payments as long as the loan closes by September 27th. How is that? How has that influenced what you're doing? And I guess the question for me is: are buyers saying, "Hey, I'm a $3 million loan. I'm going to save a couple hundred grand. I'll get the seller to move faster, maybe give them a little more money." Has that come into play?
So the stimulus around the 6 months of no principal and interest, and that's not a deferment, that's actually taking care of those 6 months worth of payments. It's very popular. We love it. The buyers and the sellers love it. And we haven't heard if that's going to be extended in this next set of stimulus. We're really hoping. But I know we've gotten a lot of questions around, have you heard if that's going to continue past September? We have not heard. We're hoping. So right now we are taking it very seriously, sense of urgency that this is our one time to capture that benefit. So kind of the first part of the question is we're seeing an uptick in definitely needing to close by the end of September. And we're obviously taking that very seriously. And I think that it is spurred on buyers and sellers to really crystallize their decision making process with one another. And buyers, I think, are really keying in on, okay, this is the business I want. Yes. Seller, yes, this is the buyer I want. And let's move and make this happen by the 27th of September. We aren't, as a lender, at least we aren't changing our decision-making process, or we're not altering our requirements just because you're going to get 6 months of P&I forgiveness. I mean, it's a boon to the working capital. It's a great benefit, but we're not changing our decision-making process because it's there now all of a sudden, i.e. we're not going to make a loan now that we wouldn't have otherwise just because that 6 months is there. And from the buy side perspective, I haven't seen any buyers saying, okay, seller, we'll give you a break on price, or we'll pay you more because I'm getting this benefit. I think it's just, especially in this time, it's an added benefit for working capital. And, we do have some recessionary, thoughts we've got to think about for 2021. So I think everyone's looking at it as just an extra cushion for the success of that business. Not that the business is worth any more now.
Okay. So have you seen deal structures change at all because of COVID? The amount you'll lend, the buyer cash needed, the more seller notes, anything, earnouts.
Yeah, I would say that the spirit and the intent of our structures hasn't changed much. We still want good, solid, historic debt service coverage, ability for the company on a historic basis to pay for the debt being put on. We've always wanted, a fair balance between buyer equity, seller note, and debt. I would say, though, that in sort of a partnership of balancing the risk, maybe we're seeing a bit more escrow holdback, just to make sure that the next 3 months or 6 months or whatever sort of the mitigate is, or whatever we all might be a little sensitive to, is getting done. So maybe a little bit more escrow holdback, maybe a little bit more emphasis on maybe a clawback element to the seller note, just making sure that the 2020 financials are sustainable at this level, not an earnout, but just making sure that everything is sustainable and what's being paid for is what's being purchased, so to speak. So maybe a little bit more clawback, a little bit more escrow holdback.
Okay. So my last topic, and if you have anything else you want to add in general, I welcome your input. But you mentioned the PPP loans, and you factor that in, and there's a couple questions related to this. If there's an existing PPP loan, I believe it's true, the lending bank has to consent to a buy-sell deal if the loan has not been forgiven. And of course, there's no paperwork as of the end of July to even start forgiving. And then what happens if there's a buy-sell deal in between forgiveness and the 24 weeks and all of that. I'd like your thoughts.
Okay, kind of an unfair question, but I'm going to attempt it. And I say unfair question because, as everybody knows, I think the whole world knows, the stimulus around PPP has been really, really helpful for small business, and trying to facilitate this level of stimulus has just been some stops and starts to it. So, and there's a huge asterisk because I think we're being told that we're going to get a lot of clarity around that sometime this week. So maybe you do a little follow up to this next week, and you probably correct everything I'm about ready to say. So big asterisk. I think technically if there's a buy sell, the PPP lender is supposed to be consulted around what happens. However, it's just been a little bit difficult to navigate all of this. So I can just say at least what we're doing, and Live Oak is contemplating, at least today. I might contradict myself in a matter of a few hours, but in an asset sale, we are escrowing the PPP dollars. We're putting them in an escrow holdback, and with the idea that those dollars could be released to the seller upon forgiveness. That's at least how we're trying to handle that.
Mm-hmm. Okay. Yeah. Well, one thing you said is that you expect clarity from the government. I mean, that doesn't make
Yes.
sense, Lisa.
we're expecting that. At least we heard this week we're expecting it. And I think that the idea is that forgiveness applications can start being received and processed starting middle of August. That's going to be a lender by lender basis as to how each lender's back office is it sort of set up and ready to handle the forgiveness process.
Okay. So is there any other tidbits you'd like to share at this time?
Well, given that we're all learning how the world works in a pandemic, we're all learning that together. We're all in the same boat on figuring things out. I will tell you, just from my perspective, as being a Live Oaker, we are extremely busy on the business acquisition side. I mean, who would have guessed that back in March as to where we would be and how busy we would be come August? For us, the focus is on COVID-resistant, COVID businesses that can do well in the environment we're in and that we're going to be in for quite some time. But I will tell you, we are actually closing loans, and there are, interestingly enough, a lot of businesses out there that are going to survive, do well in this environment. And I see that the buy-sell process and timing right now, it's not interrupted. It's continuing very, very briskly.
Okay. Well, you brought up one thing when you said you're busy. So one more question.
Sure.
What percentage of the buyers that you are working with are individuals buying a business versus growth by acquisition? And I ask that because right now we have 3 clients who are going after other companies in their industry.
Yeah, that's a great question. I love that question. I'm going to say, I'm kind of making this up, but it's just sort of directionally. I'm going to say a quarter strategic to 3/4 just kind of third-party acquisition. But that quarter strategic, I think, is actually gaining some speed and some momentum. And I will say that right now we're closing 5 loans right now for our own portfolio, my own clients that had an ability to take advantage of a new acquisition and or buy their real estate and or buy their partner out. So this idea of existing businesses growing, right-sizing their balance sheet and taking advantage, it's very, very strong. Great opportunity and great point there. And, we love those.
Yeah, and I think for a lot of these businesses that were hurt, that may be their best, if not only option, is someone in their industry.
Yeah, absolutely. And then that helps out the businesses that may be struggling or just don't have the playbook to manage what's coming here or what we're in the middle of. So it's a great way for, the industry to kind of heal itself too.
Okay. Well, Lisa, thank you for your insights. And
Thank you.
as always,
right.
good to see you.
You too. Bye now.